Hey, good morning. Let's go over today's trade plan. So in the overnight session, earlier part of the overnight session, ES failed at that oh 05 to oh 07 area and ended up liquidating down towards that strong support that we had around 1890. And from there, so far, we've seen a really strong buy response for a move back up towards the 13 quarter to 15 quarter resistance zone, which for today is marked up as pre-market resistance. So at this point, heading into the session, we know that heading into the day short term, the buyers have regained control. And at this point, that low that was made overnight at 90 quarter could end up being a significant low, bigger picture, on the larger time frames. That was a area that was discussed when we first, had that big sell-off down from 1955 to 65 all the way down towards 23, 24. And at this point, the market has tested the top of a very established balance area from earlier in the year, and we've seen that the market has put in a pretty decent bounce off that zone. At this point, heading into the day, again, we know that the buy side is very clearly in control, and what's going to make today challenging is just where do you hop on board? And at the same time, we could still get rotations off the resistance zones as well, right? And given the wide overnight range, given the recent volatility expansion, the rotations can be 4 to 6 points or more. And that makes it a bit difficult to take advantage of the upside from this point on, just because ES has already moved, from 1890 all the way back up to this 1913 zone. So we've already bounced, over 20 points from that low, and that's going to make it a bit challenging to figure out, where to jump in. So I think the best thing and the most prudent way to approach this is to only take trades, at the inflection points. Wait for a pullback or wait for the market to kind of break out and then pull back into a prior resistance zone or a prior, swing high, something like that. So focus on, getting in at an inflection point. Otherwise, just leave it, right? Just let it go. I mean, it's one day, and even if the market moves from here back up towards, 18 half, 20 half, 23 quarter, 25 quarter, which is very possible on the day time frame. If you can't get in at a spot where the risk is very well defined and you have at least 1.5 to 2 hour potential off the trade, it's not really a valid trade idea. Even if you're able to identify the direction that the market's going, if you can't identify a good spot, a high probability, high reward to risk spot to hop on board, then it's not really a valid trade idea that can actually be traded, because you'll be taking on more risk to actually put on that trade, and the risk reward is not really going to be there. So it is going to make it a bit challenging. Waking up and seeing the market move 20 plus point off a very strong support zone makes it feel like it's a missed trade, and that can actually result in traders taking on more risk than they normally would, because now they feel like they've kind of missed out on this move, and they have to capture some of it. And just be aware of that trap, and just kind of, as long as you're aware of it, I think that it's much easier to tackle and much easier to deal with. So heading into the day, we still have these resistance zones. Like I said, they can still result in responsive sellers being active and getting rotations. And on the downside, given the expansion in volatility and given the wide ranges, we can quite easily get a pullback towards oh 05 to oh 07 half. Pre-market towards oh 05 to oh 07, but if the market continues heading higher, then it may not really even reach all the way down to oh 05. But those are the spots where they are the short-term inflection points, and at the very minimum, you can get a tradable reaction, and that's the spot where it's worth it to try a long setup and see if you can, hop on board for a continuation higher. And again, it's still something that will need to be read in real time. We don't want to see any strong, wide range bars on the downside at this point. Orderly pullbacks should be the way to go. And if it's a wide range, high momentum, high volume push lower into support, then it still calls for caution, right? In this volatility, you still need to be able to read the market in real time. But if you are going to take that long trade, then 05 to 07 provides you with good trade location and at least some price edge where the market, has a chance to make a significant move off that level. Below 05 to 07, every support zone on the way down at this point has potential to attract buyers. And short term, given that, there aren't any major econ reports out today and we have a big rejection at the lows, any of those zones can actually shut off the selling and reverse the market back up towards 13 quarter to 15 quarter, 18 half to 20 half. So, pull back to 0507 is a potential long. 1900 and 1902 can attract buyers with, yesterday's RTH low being right there. And in the event of an extended pullback, 95 to 97 half can definitely, shut off the selling and reverse the market back up. And, below that we have strong support, 89.75 to 91.75. Ideally, we should not be heading back there. Ideally, at this point, the market should hold above 1900 and, balance above 1900 if this is really going to be a true rejection. So, right now, heading into the day, the short-term bias is bullish, but at the same time, we do have to be aware of the fact that the market has already bounced, 20 plus points. And because of that, we don't want to get involved at very aggressive trade location unless, we're seeing a setup in real time or, we're taking a setup at a very short-term inflection point in real time, which could be, minor pullback into a previous swing high or, previous breakout area intraday, something like that. But, at this point, you do want to be a bit cautious on taking along at too high of a price, because even though it might continue higher, it could easily pull back 3 or 4 points and then continue higher, right? And it could tag your stop and then go higher. So you just have to be aware of the trade location you're getting, and you want to make sure that the stop is not so wide that you're not able to get good reward to risk, and at the same time the stop is wide enough that you don't get stopped out from just a minor little 1 or 2 point pullback. So, in this volatility, we have been using typically 2.5 to 3.25 point stops on most of our trades. And, that's been working out pretty well so far. So, use that as a gauge. Most of your trades are probably going to be 2.5 to 3.25 point stop loss type ideas, which means that, you need to be able to get, 5 to 8 points of profit on the trade if you want, 1.5 to 2 R on your trade setup. So keep that idea in mind. So those are the main thoughts heading into the day. Let's see if the buy side is able to maintain control throughout the session at this point, or at least throughout the morning, and we'll take it from there.